Hello everyone and welcome back to XM.com. It's Thursday, May 16th. I'm Cristina Bartenidu, investment analyst, and at this video I will share with you some nice technical updates after the release of weaker than expected US monthly CPI data, as well as softer than expected retail sales, which basically increased the odds of rate cuts by the end of this year. Specifically, investors are currently expecting 2 rate cuts for this year, which consequently added significant pressure on the US dollar, but helped gold and US indices to hit new highs. So let's have a look at dollar yen first. Let's see what happened there. We can see that the pair pulled aggressively below the 156.60 territory, failing to crawl back into this bullish formation over here. Consequently, the price closed negative below the 20-day moving average, while today we saw further weakness to 153.58. Well, if you look at the technical indicators, the RSI is still around its 50 neutral mark, but the stochastic oscillator has already turned down, so the risk is currently looking neutral to negative. And we can see that the price is still trading above this resistance turned support trend line around 153.35, so that territory might protect the market from additional declines. The 50-day moving average is converging towards that territory as well, which coincides with the 50% Fibonacci retracement of this upleg over here, while not far below that this longer term support trend line coming from December 2023 could also block the way down around 152.43, ahead of May's low around 151.84. This is where the 61.8% Fibonacci retracement of this upleg is located. That level is currently seen around 151.75. So if selling pressures extend below that threshold over here, turning the medium-term outlook back to neutral, then that might cause some more selling, probably towards the 150 psychological mark, and then down to 149, where the 200-day moving average is currently located. Now in the event upside pressures resurface, we may see another test around this resistance trend line and the lower band of this bullish channel, both seen between 156.25 and 156.60. If we successfully overcome that bar, then the focus will turn immediately to the 157.83, 158.40 territory, where the rally posed back in April. Not far above that, I would also pay attention to this ascending line coming from January at 159.10. If that proves another easy obstacle to overcome, then we may see then the rally could extend towards the 34-year high, 160.20, while higher than that, the next target could be the upper band of this bullish channel, 161.53, as well as this critical resistance line coming from July 2023 at 162.50. Now turning to gold, the short-term technical outlook is looking more encouraging here. We can see that the price closed above this short-term resistance line and hit a new high of 2,397 earlier today. The RSI, the stochastic oscillators, keep trending up. Specifically, RSI is comfortably above 50 and below 70, so that suggests a bullish bias for this market. However, the 2,400 level might be a challenge to overcome, while the 2,415 level could also be another interesting area to watch. If the price closes above this territory significantly, surpassing the 2,431 record high as well, then we may see a significant increase up to the 2,480 in 2,500 territory, where this important constraining line coming from the 2022 low is located. Now the downside, this resistance line could act as support if selling pressures are surfaced around 2,365. Lower than that, I would also keep a close eye on the 2,335 and 2,325 territory, where the 20-day moving average is located, as well as the 23.6% Fibonacci of this upleg. If the decline continues from here, then the trend line zone between 2,283 and 2,260 could be the next destination. And finally, concluding this video with the US 500 stock index, the index hit a new record high of 5,320 in the aftermath of weaker than expected US data. If we look at the technical indicators, overbought conditions the indicators have detected overbought conditions, so that suggests limited room for improvement. Futures markets are currently pointing to a positive open, so I would be a bit cautious about that given the overbought signals coming from the RSI and the stochastics. Nevertheless, if the market picks up steam, we may see a new higher high, probably near the 5,400 psychological mark. If not here, then I expect I expect the uptrend to extend towards the 5,485 and 5,550 level, where the 161.8% Fibonacci extension of this short-term downleg is placed, as well as these two constraining lines are also within the same location, so that might be a critical territory to watch before the 5,600 level comes into view. Now, if the market comes under pressure, falling back below this resistance line over here, support could initially come somewhere between 5,230 and 5,182, where the 20-day exponential moving average is located. Below that, the trend line zone between 5,080 and 5,100 could be another key area to watch ahead of the 100 exponential moving average, which is currently located near the 5,000 level, in the 23.6% Fibonacci retracement of this upleg over here. So that's all. That's everything I wanted to share with you guys today. Thank you for watching, and see you next time. Bye bye for now.